Alright, excess tax introduction. Excess tax may be imposed with certain tax exemption organizations. These topics shouted of this chapter discuss prohibited tax shelter transactions, exhibited benefit transactions, excess business holdings, taxable distribution, sponsoring organization taxes on prohibited benefit distributed of the donor advised funds. Donor advised funds, excess tax on private funds, excess tax on 501c21 Black Lung Benefit Trust, excise tax on failure to meet the community health needs and assessment requirements of a hospital. Useful items. You may want to see the forms and instructions for 4720, return of certain excess tax under Chapter 41 and 42 of the Internal Revenue Code. See Chapter 6 for more information about getting Form 4720. Prohibited tax shelter transactions. Section 4965 imposes the excess tax on certain tax exempt entities that are parties to prohibited tax shelter transaction. An entity manager who improves the otherwise cause the entity to be party with the prohibited tax shelter transaction known as his reason to know that the transaction prohibited tax shelter transaction. Additional Section 6033 provides new disclosure requirements for the tax exempt entity that is party to prohibited tax shelter and transactions. Tax-exempt entities. Tax-exempt entities are subject to Section 4965 include the entities described in Section 501c, including but not limited to the following common types of entities. Instrumentalities of the United States described in Section 501c. Churches, hospitals, museums, schools, scientific research organizations, and other charities described in Section 501c3, civil leagues, social welfare organizations, local associations of employees described in Section 501c4, labor, agricultural, horticultural organizations described in Section 501c5, business leagues and chambers, commerce, trade associations, and other associations described in 501c6. Voluntary Employees Beneficiary Association, VEBAs described in Section 501c9. And credit unions described in Section 501c14. Alright, Voluntary Employees Beneficiary Association, or VEBAs, described in Section 501c9. Credit unions described in Section 501c14. Insurance companies described in Section 501c15. Veterans organizations described in Section 501c19. Religious and populistic associations, corporations described in Section 501d. Entities described in Section 170c, including state and possessions, United States District, Columbia, political subdivision, states, political subdivision, possessions of the United States, but not including the United States. Indian tribal governments with the meaning of the Section 7701A40. Entity manager. Entity manager is a person with the authority and responsibility similar to the exercise officer, director, and trustee for any of the acts of the person, the authority, and responsibility with respect to prohibited transactions. Prohibited tax shelter transaction. Prohibited tax shelter transaction is listed in transaction with the meaning is Section 6707A-C2. The prohibited reportable transaction. Prohibited reportable transactions. Confidential transaction with the meaning regulations of 160114. B3 transaction contractual protection with the remaining of the regulations section 160114B4. See the instruction for the form 8886T for more information on the listed transaction prohibited reportable transaction. Subsequently listed transaction. A transaction with which the tax exempt entity, the party, and later a determined listed transaction after the entity has become the party to its and subsequently listed transaction. The entity level and taxes, Section 4965A, then impose the entity level of the excess tax, the tax exemption, any entity described in 1, 2, 3, and 4 above the become of the party to prohibit the tax shelter transaction party. Subsequent listed transactions defining earlier the excise tax and impose the tax exempt entity applies to the tax years in which the entity becomes the party of the prohibited tax shelter transaction. Any subsequent tax years, the amount of the excess tax expanded for the tax exempt entity knew that it had reason to know the transaction was prohibited. The tax shelter transaction at the time became a party of the transaction to figure and report excess tax imposed on the tax entity that from being the part of the prohibited tax shelter transaction form 4720. For more information about the excess tax, including information on how it is regarded, see the instructions of 4720. Alright, manager level tax. See Section 4965A2. Then impose the excess tax on tax exemption and with the manager approve the otherwise size and needs to be party to prohibited tax shelter known as the reason to known. The transaction is prohibited tax shelter act transaction excess taxes amounting to $20,000 assessed for each with approval of the other action and causing the originate organization to be part of the prohibited tax shelter transaction report to the public 4720. or excess benefit transaction. Excise tax on excess benefit transaction. A disqualified person who benefits from the excess benefit transaction, such as compensation, fringe benefit, the contract payments, certain sections of the 501c3, 501c4, and 501c29. Organizations must correct the transaction may have to pay with the excise tax under the Section 4958. The manager for the organization may also have to pay an excess tax under Section 4958. These taxes are reported on Form 4720. Excess taxes are imposed with the application by application taxable exempt organization provided the excess benefit and a disqualified person benefit that exceed value of the benefit received in exchange. There are three taxes under Section 4958 is disqualified and liable. The first two taxes, certain organization managers are liable. For the third tax imposed excess benefit transactions do not apply if the transaction under written note contract was binding on September 30th, 1995. All times, September 13th, 1995. All times thereafter before the transaction occurred. Or taxes on disqualified person. Excess tax equal to 25% excess benefit with each excess benefit transaction between applicable taxes and organization disqualified person. The disqualified person who benefited from the transaction liable to tax C defined disqualified person, later disqualified persons. Additional tax and disqualified person. If the 25% of the tax is imposed excess benefit, the transaction correct with the taxable period with additional excess tax on 200% of the excess benefit is imposed with the disqualified person involved. If a disqualified person makes a payment of less than the full correction amount of the 100% of the tax imposed only on the unpaid portion of the correction amount, if more than one of the disqualified person receives an excess benefit of the excess benefit transaction, all such disqualified persons are jointly and severely liable for taxes. To avoid 200% tax, disqualified person must correct the excessive benefit transaction during the tax period. The 2000 tax year is abated if refunded and collected the excess benefit transaction corrected with 90 per day with the correction of the period beginning with the day of statutory nature and notice of deficiency issued. Tax period. The tax period. Or the tax period means the period beginning with the date of the excessive benefit transaction occurs at the ending of on the earlier of the date notice of the deficiency was mailed with the disqualified person with the initial tax on excess benefit transaction, and the date on which the initial tax on the excess benefit transaction disqualified the person assessed. Tax on organization managers. The tax imposed with the disqualified person for the excess benefit transaction, excess tax that equal to 10% of the excess benefit is imposed with the organization manager who normally participated in excess of the benefit transaction unless such participation wasn't willful, and was due to unreasonable cause. The tax can exceed $20,000, $10,000 transaction entered in the tax year before August 18, 2016. Each of the transaction these are either joint several liabilities or the tax, the person getting liable for the both tax and paid with the disqualified person organization manager tax, particular cross excess benefit transaction. Alright, your organization manager. Organization manager is any officer, director, trustee, or an applicable tax-exempt organization, any individual having the power of the responsibility similar to the officer, directors, and trustees of the organization, regardless of the title. Organization manager is considered to have participated in an excess benefit transaction when the manager has opposed the transaction in manner with the consent with the fulfillment of the manager responsibility of the organization. For example, the director who votes against giving excess benefit would ordinarily not be subject to 10% tax. A person participates in transaction knowing if the person has actual knowledge of sufficient facts based solely upon the facts such that the transaction would be excess benefit in transaction. Is aware of such transaction under these circumstances may violate the provisions of federal tax law governing excess of the benefit transaction negligently and fails to make responsible attempts to determine whether the transaction is excess of benefit transaction with the manager in fact aware of such of the transaction. Knowing does not mean having the reason to know. The organization manager ordinarily won't be considered knowing if all of this full disclosure of the actual situation. Appropriate professional organization managers relied on professional reason for the opinion of the manager, the professional expertise of the manager, relied on the fact the requirement for the rebuttable presumption of reasonable having been satisfied. Participation organization manager is willfully if it is voluntarily conscious intentional organization manager participation due responsible cause of the manager has exercised the responsibility on behalf of the organization with the ordinary business care of prudency. All right, excess benefit transaction. Excess benefit transaction is a transaction where the economic benefit provided by the applicable tax exemption organization directly and indirectly to or for the use of the disqualified person, the value of economical benefits provided by the organization exceeds the value of the consideration, including the performance of the service received, provided such benefit. The excessive benefit transaction rules apply to all transactions of disqualified person, regardless of whether the amount of benefit provided determines the whole part of the revenues of one or more activities of the organization. To determine whether an excess benefit transaction occurred with the consideration benefit exchange between the disqualified person and the applicable tax-exempt organization, and it needs the control taken into account for the purpose of determining the value of the economic benefit, the value of the property, including the right of the use of the property, and the fair market value. The fair market value is the price of the property, and the right of the use of the property would be changed hands between willing buyer and willing seller, neither being under the compulsion to buy and transfer property with the right of the use of the property by having the responsible knowledge of relevant facts. Donor advised transaction occurring after August 17, 2006. If the donor advised the funding to excess benefit of the transaction include the grant, loan, compensation, or other similar payment from the fund to donor advisor, family member to donor advisor, 35% controlled entity, donor or donor advisor, 35% controlled entity of the family member of the donor or donor advisor. The excess benefit of the transactional amount of the grant, loan, compensation, or other similar payment. For the additional information, see Instruction 4720. Supporting organization transaction occurring with July 25th, 2016. For supporting organization defined in Section 509A3, is excess benefit transaction includes grants, loans, compensation, other similar and payments provided with the supporting organization. Substantial contribution family member, the substantial contributor, 35% controlled entity with substantial contributor, 35% controlled entity with family member, the substantial contributor, and any additional excess member of the benefit transaction includes a loan provided with the supporting organization qualified and disqualified other than the organization described in Section 509A and A1, 2, and 4. The excess benefit substantial contribution parts related to the contributors include the amount of the grant, loan, compensation, and other similar payments. For additional information, see the instruction form 4720. Excess benefit transactions generally do not apply with the transaction between the support organization and supported organization described in Section 501C, 4, 5, and 6, and for their charitable purposes. Date of occurrence. Excess benefit transaction occurred with the date of the disqualified person received the economic benefit of the organization federal income tax. However, the single contractual agreement provides a share for the compensation of the other payments of the other than the use of the disqualified person during the disqualified person tax year. Excess benefit transaction with respect to the payments occurred with the last day of the taxpayer's year. In the case of the benefit provided with a qualified pension profiting sharing stock bonus plan with the transaction occurred with the date of the benefit is vested in case of the transfer of the property subject to substantial risk of the forfeiture. In the case of rights of the future compensation contributed property with the transaction occurred with the date of the property rights for the future compensation property and subject to the substantial risk feature where a disqualified person elects for the included amount of the gross income tax year for the transfer under the Section 83B. Excess benefit transaction occurred with the date of the disqualified person received the economic benefit of the federal income tax purpose. Are correcting a excess benefit. An excess benefit transaction corrected undoing the excess benefit to the extent possible, taking additional measures necessary to placing the organizational financial position not worse than what it would have been if the disqualified person was dealing under the highest fiduciary standards. Disqualified person correct in excess of the benefit, making the payment in cash for the cash equivalents, excluding payment of the promissory note equal to the correction amount of the applicable tax exemption organization. The correction amount equal to the excess benefit plus the interest of the excess benefit and interest rate cannot be lower than the applicable federal rate compound annually with the month the transaction occurred. The disqualified person within the agreement of the applicable tax-exempt organization make the payment of the return specified property previously transferred in excess of the transaction in case the disqualified person treated as making a payment equal to the lesser of the fair market value of the property of the date of the property is returned to the organization, or the fair market value of the property date of the excess benefit of the transaction occur if the payment resulting in the return of the property is less than the correction amount. With the amount disqualified must make the additional cash payment to the organization equal to the difference. The payment resulting in the return of the property exceeds the correction amount described above. The organization can make the cash payment to the disqualified person equal to the difference. Exemption for the correction of the excess benefit transaction discussed earlier. No amount will be paid with the manner described in the secretary carry and be held in donor advised fund. Applicable tax-exempt organization. Applicable tax-exempt organization is Section 501c3, 501c4, 501c29 organization with a tax-exempt under Section 501a, which has such organization at any time during a 5-year period ending with the day of successive benefit transaction. Application of the tax-exempt organization does not include the private foundation defined in Section 509a. A government entity that is exempt from the non-subject taxation without the regard with 501a. Not required to file an annual return or for foreign organization recognized by the IRS treaty with recognized with substantially and in all parts of the gross investment income from the source outside the United States. An organization isn't treated with the Section 501c3, 501c4, 501c29 organization period with the cover. The final determination of the organization was tax exempt under Section 501a, but only with the determination was based on the private inurement of one of the more excess benefit transaction. Alright, disqualified person. A disqualified person, any person at any time during the 5-year period ending with the date of the transaction position exercise substantial influence over the affairs of the organization, a member of the family member of the individual described in 1 and or 35 controlled entity. For 5% of the controlled entity. Alright, the donor advised fund sponsoring organization, certain supporting organization concurred with the August 17, 2006. The following person will be considered a disqualified person along with a certain family members. 35% of control and even association with the donors advised funding, donors of the donor advised funds, investment advisor of the sponsor organization, disqualified person with Section 509A3. Supporting organization support for the applicable tax exemption. For certain support, the organization transaction occurred with July 25, 2006. Substantial contributors supporting organization will be considered as a disqualified person will respect the supporting organization along with the family members of 35% controlled entity. Investment advisor. Investment advisor means the sponsoring organization any person with the compensated with such organization but an employee of such organization for the managing investment, providing with the investment advice and the assets maintained the donor advised funds owned by such sponsoring organizations. Substantial contributor in general with substantial contributor means that any person with a contributed bequeathed or aggregated or more than $5,000 to the organization amount that is more than 2% of the total contribution for the bequest received at the end of the organization's tax year with which the contribution bequest is received. Substantial contributor include the grant of the trust or grantor of a trust. Family member. The family members disqualified person include the disqualified person's spouse, brothers and sisters, whether the whole or half-blood spouse of the brothers and sisters, whether whole or half-blood ancestors, children, any of the legally adoptable child, general child, grandchildren, great-grandchildren, spouse, children, grandchildren, great-grandchildren, whether whole or half-blood. 35% controlled entity, the 35% controlled entity, the corporation with the disqualified and sons of the owner more than 35% of the total combined voting partnership in which such persons are owned more than 35% profits interest, trust and estates in which such person owns more than 35% of the beneficial interest. In determining the holding of the business enterprise with any stock with the interest owned that directly and indirectly shall apply. Persons having substantial influence among those who are in position where they exercise substantial influence over the affairs of the organization, for example, the voting members of the governing body members and holding the power of President, Chief Executive, Chief Operating Officer, Treasurer, Chief Financial Officer, person of material financial interesting of the provided sponsor or organization. Person not considered to have substantial influence. Person who are not considered to be in a position to exercise substantial influence over the affairs of the organization include any employee who received the benefit total less than the highly compensated among Section 414 Q1B1, who does not hold the executive voting power as mentioned earlier in the discussion. A disqualified person is a family member of a disqualified person and is substantially contributors. Tax-exempt organization described in Section 501c3, Section 501c4 organization will respect transactions engaged with other 501c4 organizations. Facts and circumstances. Determination whether a person substantially influenced over the affairs of the organization based on all the facts and circumstances. The facts and circumstances intend to show the person has a substantial committee over the affairs and organization include but are limited to the following. The person Founded by the organization, person substantial contributed by the organization under Section 507D and then 2A of the definition, only taking into account with the contribution of the organization in the past 5 years. The person compensation primarily based on the revenue derived by the activity of the organization. That person control. The person has the share of the authority with the control of demand. The substantial portion of the organization capable expenditures, operating budget, compensation, employee. The person manages the discrete segment activity of the organization represents the substantial portion of the activity's assets, income, expense organizations as compared with the organization as a whole. The person owns the controlling interest measure for the either vote or value of in a corporation partnership with the trust of the disqualified person. The person is a non-stock organization controlled directly and indirectly by one or more disqualified person. The facts or circumstances attending show that the person does not have substantial influence over the affair of the organization, include but are not limited to the following: and the person has taken a bona fide vow to poverty as an employee or agent of the religious organization or on behalf. The person is an independent contractor who solely relationship with the organization, provide professional advice without having to decision making with respect to the transaction for which the independent contractor won't economically benefit either direct or indirect aside from the customary fees provided received and the professional advice rendered. Any preferential treatment the person received based on size of the person. Donation is also offered to make the comparable wide solicited donation. The direct supervisor of the person isn't a disqualified person. The person does not participate in management decision affecting the organization as a whole. The discrete segment of the organization represents a substantial portion of the activities, assets, income, expense of the organization as compared with the organization as a whole. In this case, multiple organizations affiliated with the common control of the governing documents determine whether a person does or does not have substantial influence made separately for each of the applicable tax exempt organization as person with a disqualified person with respect to the transaction more than one organization. Reasonable compensation. Reasonable compensation of the value would ordinarily be paid by like services in like enterprise under the like circumstances. In Section 162, the standards will apply by determining the reasonableness of the compensation. The fact of the bonus, the revenue sharing arrangement is subject to a cap, and the relevant factor for determining reasonableness of the compensation. To determine the reasonableness of the compensation, all items of the compensation provided by the applicable tax exempt organization exchange with the performance determined taken into account with determining the value of the compensation exempt from the economic benefits to disregard under the decision of disregarding benefits. Items of compensation include all forms of cash, non-cash compensation, including salary fees, bonuses, services, payments, deferred non-cash compensation. The payment liability insurance premiums for more than for the payment and reimbursement of organization penalties, taxes, certain expenses under Section 4958, unless the kind excludes renewable income minus the fringe benefit under Section 132A. For all other compensatory benefits, whether they are not included gross income and the income tax purpose of tax and non-taxable fringe benefits, except fringe benefits described in Section 132, and foregone interest on the loans. Intended to treat benefit to the compensation. Economic benefit is treated with the consideration performance services unless the organization provided with the benefit clearly indicates it's intended to treat the benefit compensation with the benefit paid of the applicable tax exemption organization or entity that is control of it is treated with it clearly indicating the intent to provide economic benefit to the compensation service only if the organization provides substantial the contemptuous with the transfer of the economic benefits under the consideration while they provided with the contemptuous written substantially substantiation of the intent to provide economic benefit is consumption included the organization pursued reduces signed written employment contract. The organization reports and benefits the compensation original form of W-2, the Form 1099 or Form 990 on the amendments to the form filed before starting the IRS examination. This qualified person will report the benefit and income of the person or original form of the 1040 or in the amendment to the form filed in starting the IRS examination. Or exemption as an economic benefit excludes the disqualified person with gross income of the income tax purpose. The applicable tax exemption organization is not required to indicate the intent with the provider with the economic benefit is a compensation for the service. Reputable presentation of the transaction isn't in excess of the benefit. Transaction payments under the compensation arrangement presumed with the presumable for the transfer of property rights of the use of the property. They're presumed to be a fair market value. The following three conditions are met. The transaction is approved with the advance by the authorized body of the organization or any of the controls which is composed of the individuals who do not have the conflict of interest concerning the transaction. 2. Before the making of the determination, the authorized body would obtain with the relied upon the appropriate data to comparable with this in space special safe harbor for the special or small organization. The organization had the gross receipts of less than $1 million. Appropriate comparable data includes the data of the compensation paid with three comparable organizations in the same similar communities of similar services. 3. The authorized body with adequately documented with the base of the document determination concurrent with the making the determination of the document should include terms approved and transaction of the data approved of the member of the authorized body that we were present during the debate on the transaction with approved of those who voted on the comparability data obtained with the relied upon with the authorized body and how the data was obtained, any action of the member of the authorized body with having conflicting interests, documentation of the base of the determination before the later next meeting of the authorized body of the 60 days after the final action of the authorized body was taken, the approval of the records are reasonable, accurate, complete with a reasonable time thereafter. Disregard benefit. The following economic benefits are described with the Section 4958 purpose. Non-taxable fringe benefits excluded from the income tax under Section 132. Benefits provided with the volunteer for the organization and benefit provided of general public examination exchange with a member of the membership with a fee contribution of $75 or less. Benefits provided with the member of the organization due to the payment of the membership of the fee done as a result of the deductible deduction of the significant number of the disqualified person may be similar, but the payment of the contributions are often of similar economic benefit. Benefits provided with the personally solely member of the charitable class of the applicable tax-exempt organization intended with the benefit the purpose of the accomplishment exempt purpose. Transfer economic benefit to foreign youth of the government unit and defined in Section 170C. Exclusive public purpose. Special exemption for the initial contract of Section 4958 does not apply for the fixed payment made with the person under the initial contract. The fixed payment is the amount of the cash or other proposed property specified in the contract, determined by the fixed formula specified in the contract with the pay with the transfer to exchange with the provision specified service of the property. A fixed formula can incorporate the amount that depends upon the features specified in contingency along with no one has the discretion calculation the amount to the payment decided whether to make the payment such as the bonus initial contract is binding written with the contract between an applicable tax exempt organization person who has been disqualified person immediately who have been entering the contract a binding written contract provided that can be determined to cancel the applicable tax exemption organization with or without other parties' consent exempt for the result of substantial non-performance with a substantial penalty is treated with a new contract earlier dated than any termination cancellation would be defective. Also, the parties make material to change the control, which includes extension of renewal of the contract exempts as the extension of the renewal resulting in the exercise of the option disqualified person that performed an incidental change of the amount of payment under the contract achieved with the new contract effective date and the material change. Alright, excessive building business holdings. Private foundations are generally not permitted to hold more than 20% interest on unrelated business enterprise. They may be subject to an excess tax amount with the excess business holding for the purpose of Section 494, 4944, the tax 4943, the tax years beginning after August 17th, 2006, the donor advised the fund or certain supporting organization are considered private funds. Donor advised funds. In general, the donor advised funds is funded with accountability separate and identified with reference to the contribution of the donor to donor's own with the control of the sponsor organization and for which the donor or experts have advisory privileges concerning the distribution and investment of the funds. Supporting organization. Only the certain supporting organizations are subject to the excess buildings business holding tax under 4943. These type are type 1. This includes type 3 supporting organization that are functionally integrated with the and 2, the type 2 supporting organization that are accept with any gift of contribution with the person who may by themselves and in connection will be related to the party control of the support organization with the type 2 supporting organization support. Tax is a private foundation that has excess fund holdings of the business enterprise that become liable excess of the tax based on the amount of the holding initial tax of 10%, 5% of the tax years beginning after the August 18th, 2006. The value of the excessive holdings imposed the last day of each of the tax year ends during the taxable period. The excess holding of the determination of the day of the during the tax year when they were largest. The foundation fails to correct the excess building holdings become liable to additional tax of 200% of the remaining excess business holdings as earlier with the tax estimate mailing with notice of the discretionary. For more information, taxes excess the business holdings, see instruction form 4720. Taxable distribution of the sponsoring organization. Excess tax imposed by the sponsoring organization. Each of the taxable distribution it makes of the donor from the advised fund. The excess tax is also imposed by the fund manager and the sponsoring organization would agree with the making of the distribution knowing the taxable distribution. Taxable distribution. Taxable distribution. Any distribution with the donor advised the fund, any natural person, any other person, if and the distribution, if any of the person, then one specified in section 170C2B or sponsoring organization maintain the donor advised fund with a doesn't excess of the expenditure responsibility with respect to the distribution in accordance with section 4945H. However, the taxable distribution does not include the distribution of donor advised fund to an organization described in section 170B1A other than the disqualified supporting organization. The sponsoring organization of the donor advised fund and or any other donor advised fund, the taxable tax distribution apply with the distribution occurring with the tax years beginning in August 17, 2006. Alright, supporting organization, sponsoring organization. Sponsoring organization 170C, organization that neither governmental organization or reference is referred to in 170C, C1 or 2A for private foundation. Donor advised fund. The donor advised fund is the fund of the account which is separately identified with the reference to contribution of the donor and the donors, which is owned by the control of the sponsor or sponsoring organization, for which the donor, if any other person appointed with the designated by the donor, is exempt and have advisory privileges connecting concerning the distribution investment of the fund and the help of the donor advised fund, the accounting because of the donor status of the donor. Exemption A. Donor advised fund doesn't include the fund with the account that makes the distribution only the single identified organization, government entity. 2. Any fund that accounting with the person described in 3 above, given the advice between the individual received the grants and travel study. Similar purposes, the following 3 requirements are met. The person advisory privilege performed exclusively by such person in their capacity as a committee member, which the committee member is appointed with the sponsoring organization. No combination of the other person advisory privilege described in 3 above, the person related in those 3 above directly and indirectly control the committee. All grants and funding of the account of the board are objective on a non-discriminatory basis according with the procedure approved with the advance of the board of directors of the sponsoring organization. The procedure must meet the design to ensure that all the grants meet the requirements of the section 4945G 1, 2, and 3. Disqualified supporting organization. The disqualified supporting organization 1 type 3 supporting organization isn't functional and integrated with 2 any supporting organization where donor advisor or any other related person parties directly and indirectly cover and control of the supporting organization. Tax on sponsoring agreement. The tax on 20% of the amount of each of the taxable distributions applied with the sponsoring organization. Alright, tax fund and manager. If the tax is imposed with the taxable distribution sponsoring organization, tax 5 of the distribution will be imposed with the fund and manager who agree with the distribution, not only what is the tax of the distribution. Any fund manager who takes the part of the distribution liable to tax must pay with the tax the maximum amount of the tax all funded the managers. If all funded the managers, if from one taxable distribution with $10,000, if more than one fund of the manager is liable for the tax and dissolution, with all such managers are jointly severable liable tax. More information on the tax and taxable distribution sponsors organization, see instruction 4720. Alright, taxes prohibited and benefits resulting from donor advised funds, distributions. Prohibited benefit in any donor advisory related party divided with the sponsoring organization about many with the distribution which the result of the donor advisor related party receiving either directly or indirectly a more incidental benefit. Such benefit is a prohibited benefit. The tax of prohibited benefits applied with the distribution accordance with the distribution occurring in tax years beginning after August 17, 2006. Donor advisor. Donor advisor is any person appointed with the designated donor advisor with the sponsoring organization distribution investment amounts of the fund, amounts held in the donor's fund account. Related party. The related party includes any of the family member 35% of the control of any of the definition of those terms disqualified person earlier. Alright, tax donor advisor to a related person, a tax of 125% of the benefit resulting of the distribution imposed with both of the party that divide the distribution. Why might the donor advisor related party and the party receive the such benefit, which might be the donor advisor related party, the advisor of the party who received the benefit, or jointly severely liable for the tax. Tax on funded managers. The tax is imposed on the prohibited benefit that received the donor advisor related benefit. The tax percent of the amount of the prohibited benefit imposed on any funding manager who agreed with the distribution, knowing that it would confer with the prohibited benefit that any funded manager who took up part of the distribution is liable to tax must be paid the tax maximum amount of the tax on all funds managers for any with one taxable distribution, $10,000. More than one fund manager is liable for the tax and tax distribution, and all such managers are jointly severally liable for the tax. Alright, exemption. If the person engaged in the excess beneficial transaction received the prohibited benefit, the same transaction with the person is subject to tax under the section 49.558, no tax imposed under section 49.67, prohibited benefit. More information on the tax prohibited benefits distributed from the donor advised funds, see the instruction 4720. Or excess tax on private foundation. The excess tax on net investment income of the domestic private foundation capital will gain for the appreciation, with including the tax based on the private foundation net investment income. The tax must be reported on the Form 990 PF and must be paid annually for the time filing with a return quarterly. Estimated the tax pay and the total tax for the year of Section 4940 tax minus credit is $500 or more. Form 990W is also calculated estimated tax. In addition, there are several other rules of applying the excess tax private foundations that include restriction on self-dealing between private foundation and other substantial contributions. Other disqualified contribution persons require that the foundation annually distribute the income with a charitable purpose listed the limits of holding any personal enterprise, excess business holdings. Earlier provisions of the investment must jeopardize the carrying out of the exempt purposes. Provision ensure the expenditure of the further organization exempt purposes. Violation of these provisions give the rise of the taxes and penalties against the private foundation. In some cases, the manager and substantial contributors certainly related to the person. For more information on the exercise taxes imposed on private foundations, such as instructions on Form 47020 and the instructions on Form 990 PF. Excise taxes on Black Lung Trust, Black Lung Benefit Trust. Black Lung Benefit Trust makes expenditure payments and investments other than those described in Chapter 4 of 501c221. Black Lung Benefit Trust must pay the tax equal to 10% of the amount of such expenditures. If there's any acts of self-dealing between the trust and disqualified person, a tax equal to 10% amount involved and imposed on the disqualified person, both excise the tax and reported Schedule A, Form 990BL. See the Form 990BL and instruction for the more information on the tax and what has to be filed. Even the trust expected in filing the health excess tax of the failure to meet the community health needs assessment requirements. For tax years beginning with March 23, 2012, the new exemption of the 4959 imposed that the excess tax hospital organization would fail to meet the certain Section 501R of the requirements of each of the following hospitals, and that needs must meet Section 501R of the section requirements of all the times during the tax year. Section 501R3 requirements pertaining to hospital organization preparing community health needs assessment, and Schedule H Hospital Form 990 for the details. Chapter 6: How to get tax help.